Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Thursday, August 20th, 2020. The market today just sort of seems like one of those robots from a science fiction movie. Must buy dips, must buy dips. And that's, I guess, what we saw today. Yesterday, the market sold off a little bit in the afternoon. Nothing substantial, but in the context of a market that goes up a little bit every day, it seemed substantial. It was 0.5%, basically, depending on your index. That is nothing in the scope of things. And the reason for it was actually real. Besides there was some exhaustion, et cetera. But bottom line is the Fed came out with their minutes from the last meeting, and they're concerned about the effect of coronavirus on the economy. Hello? This should not come as news to anybody, but apparently it came as news to some, or at least an excuse to take some profits, and down we went. This is one of those where reality catching up to catching up to market perceptions sometimes does occur, and when it happens, it's not always pretty. And this morning, we did not get a good economic number. Markets have been focused on the employment numbers. The new jobless claims, weekly new jobless claims, rose above 1 million after falling below. It's 1 million more people filing for unemployment this week. That number was worse than expected for a market that had been using the good jobless claims numbers as an excuse to rally. It was logical to see the markets fall in the wake of that, but pretty much after falls in Asia, in some of Asia and much of Europe, and then a bad number in the U.S., we sold off, and as of now, the lows for the day were seen pre-opening or on the opening, depending on your point of view. And here we are now looking at S&P about unchanged and NASDAQ continuing higher. It does actually make for an interesting setup, because I wonder how much of the buying that we've seen is reflexive, just people feeling they have to own, particularly Apple and Tesla, into the end of the month when they split their shares. I've said this before. It's got a psychological benefit. There's something to be said for changing two fives for a 10, so to speak, or but in this case, 5 10s for a 50. Does it make it a little? If you have a $50 bill in your wallet, it's not the most convenient thing to have all the time. So sure, I'll take 5 10s for the 50. Does it make a meaningful difference in how these companies operate or how they're perceived? No. But there's, the psychology is important, and it will be interesting to see whether that turns into a buy the rumor, sell the news type of event. But going forward, there's not that much. It's the summer. Volumes are relatively light. Volatility is relatively light. Markets are. We've been watching. Some of us have been watching the Democratic convention. There hasn't been anything that's been said that seems necessarily market unfriendly, although you do have to wonder about how the market would react. Again, if we end up with, if we end up in a situation where taxes could go up, particularly capital gains taxes, which are most directly influencing the stock market, because people, as I mentioned before, if the capital gains rate appears to be increasing, people try to sell some of their winners in advance of that. If you're thinking of taking a profit, a lot of times that's the thought, because, well, if the taxes are going to go up, I might want to take my profits now rather than later, because it'll mean a few percentage points potentially later on down the road. This is all speculative. Right now, you've got the summer, you've got a quiet market, you've got traders who are just focused on buy the dips. It's been a strategy that's worked for the most part. So, when strategies work, they get reinforced and they keep working until they don't. When that happens, we'll see. But as of now, that explains today's market for you. Have a good one, everybody. Bye-bye.